Welcome to Podcast, the Business of Dentistry podcast, brought to you by Practice Plan. Podcast delivers the best business advice, real-life stories, and practical hints and tips to make your practice a more profitable and sustainable business. And now, here's your host.
Hi, I'm Donna, one of the regional support managers for Practice Plan, covering the East and West Midlands. And today for our podcast, we're going to be thinking about when practices should review their personal and practice finances in 2026. And today I'm joined by Dan Atkins.
Hi, Donna. Thank you. I'm Dan Atkins. I'm a specialist dental financial advisor for Wesleyan Financial Services. We do have advisors up and down the country, but I cover mainly Derby, Nottingham, parts of Sheffield and actually a bit of North Wales as well.
Brilliant. Thanks ever so much, Dan. So as I say, we're going to be thinking today about, when is a good time for practices to do this review of their finances. So what do you think is the biggest financial shift or trends that you're seeing as we head into 2026 that practices really should be aware of?
Yeah. Well, the first thing to acknowledge is the economic pressures that are still intensifying at the moment, whether that's practices that are NHS, private, or a mix of both. There's a bit of a squeeze from several directions, in all honesty. Inflation, that's sticking around, staff costs are continuing to rise, especially with the increase to national insurance and minimum wage as well. And material costs, to be honest, are higher than ever, really. We're also kind of still seeing a trend towards mixed and private dentistry, particularly as we move closer to the NHS contract reforms that are coming in a few months, in April 2026 this year. And then, to be honest, on top of that, we've seen kind of patient disposable income has probably taken a hit with all the effects that have been going on over the last couple of months or a couple of years. So that naturally affects the uptake on potentially elective treatments, and that could also then impact practice revenue, really. But that's probably the shifts that have come in more recently.
Yeah, I would agree. I'm certainly seeing the same on the practice plan side of things. People are worrying, financially, whether they're going to have a good year or a tough year. And I think feels quite tough already, and we're only start of the year.
Yeah.
So why is this a good moment for practices to reassess both their personal and their business finances?
To be honest, given everything that's changing now, this is probably a perfect time for people to take a step back. Reduced patient income may mean a drop in high value treatments and private treatments. If you couple that with the upcoming reforms that are coming in, which could actually reshape how practices operate and how the profits are generated, it becomes clear why reassessing your financial positions is quite crucial, especially coming into 2026. However, there's never a bad time to reassess finances, any day of the week. Dentistry evolves really, really fast, and annual financial reviews should really be a part of running a successful practice, in my opinion.
Yeah, I agree. Great. And Dan, is that something you generally will do within your role? Is that sort of annual review with your clients something that's fundamental to how you work as a business?
Yeah, most definitely. Even as a minimum, I like to just have a catch up every 12 months, just to see what's going on, what's changes, because I always like to say you don't know what you don't know. And sometimes, just having a conversation with a specialist that's sitting in front of you may trigger thoughts or questions that could actually need reviewing. So, an annual review is key. And to be honest, even if it's more than once a year, that's perfectly fine.
Yeah.
We can be here to support as and when needed.
Yeah. And like you say, we've seen a change to patient behaviour and cost pressures definitely in 2025.
Yeah.
What financial foundation should principals prioritise for this year?
For practice principles, the foundation really of good financial planning starts with protecting what you've already have. One of the most overlooked risks is what happens if associates can't work due to accident or sickness, or if they can't work due to accident or sickness. We do sometimes find that some principals or practices choose to not enforce a locum clause that's in associate contracts, and sometimes instead pay for that locum themselves just to keep the relationship smooth within the practice. But to be honest, this can expose practices to potential HMRC scrutiny around whether the associate is truly self-employed, sorry. And that could actually have major financial consequences on the business.
Yeah.
Beyond this, beyond protection, strengthening your financial buffer is really essential, especially as we come into 2026. A healthy reserve helps you weather income dips with national insurance increasing with potentially employed staff within the business and other expenses on the rise. Reviewing your business structure can make a big difference, and especially securing your long-term financial future, to be honest.
Yeah, agree. I find that dentists often neglect their own financial planning, Dan, and they worry about the business but don't always think about themselves and what's happening with them. What key personal finance areas should they be reviewing right now?
Yeah, you're right there, Donna. It's incredibly common for dentists to focus on the practice and neglect themselves at times, but there's a few areas that do need attention. Just to name a few. First, protecting their own income, especially for dentists as well that are mainly private or have little NHS contracts, as they may not have or have little sick pay. If they were off work. One question I always ask is, what would happen to you or your family if your income was to stop tomorrow? And sometimes not many people have an answer for that, because no one ever thinks of, well, what if at times. The next can be around pension contributions are also hugely they're a really tax efficient planning tool, in all honesty, especially as personal and business tax bands tighten in real terms due to inflation. Other things to consider as well, especially if you're trading as a limited company, optimizing your salary and your dividend structure is really essential. And also, making sure your liabilities or your family's protected. Dentists and principals can earn very good money. But what happens if that income disappears all of a sudden?
Yeah.
So those are some of the, I'd say some of the key things that you could review, but the whole wide range of areas that we could go into.
Absolutely. So how should practice owners balance that reinvesting into the practice versus sort of saving and investing personally?
Yeah. So, when it comes to a practice, the owners, they should look to reinvest where it enhances valuation of the business. Whether that's digital upgrades, improving patient experience, operational efficiencies, anything that can boost practice revenue. Because all these as well can have a significant impact on the EBITDA multiples when it comes to a practice valuation. But at the same time, it's important to maintain a strong personal financial position, and then keep those medium to long term goals in view, because again, we don't know what sometimes could be around the corner. So it's working today and preparing for the future.
So for practices planning to grow, whether that's adding a clinician or expanding services, what financial planning steps should come first?
If you're looking to expand, so you just mentioned about adding clinicians or widening your service offering, selection planning still comes first, because it always goes back to protecting what you've got. And if you try to grow without protecting yourselves and something goes wrong, then it could lead to gaps in your financial plan. But then after that, I'd say think strategically. So especially with shifting patient demands, where do you look to focus? Is this enhancing that private treatment element to your business, and in bringing in aligners, implants, cosmetic services? Can you align where that market's going? Look for those opportunities. But if you're looking to expand and want to take advantage of those opportunities, especially right now, there are always options to lend. Or don't forget about lending, because they're offering competitive loan to value ratios. There's accessible terms right now for dental practice owners. But having those kind of structured financial records and a solid forecast can really put you in the best position to borrow for that growth if you need to. So that's probably where I'd look initially. Think strategically, where are we going to go with this? How can we improve? Can this improve that value of the business? Do we have the funds to do so? If not, what can we do then?
absolutely. Thanks, Dan. So you mentioned sort of exit planning and retirement briefly earlier.
Yeah.
Even if that's several years away, what would you advise a practice owner who's starting to think about what that exit looks like?
I mean, to be honest, if it's on the radar, now's the time to prepare.
Mm-hmm.
And the reason for that is that time flies when you're having fun. So things come around really, really quickly. So the where I'd start is get a realistic valuation from a trusted company. Goodwill and EBITDA multiples vary widely depending on patient base, private mix. So early visibility of this gives you time to strengthen that valuation, ready for when you are about to bite the bullet, or if you are about to sell and move on and retire.
Mm-hmm.
I think another thing to consider is, to be honest, again, protection right up to the sale. If you're unable to work, in those final years up to selling, it can have a real impact on that value, and it can be quite dramatic.
Mm-hmm.
And then again, review that retirement strategy. So let's have a look early, understand what income you may need in retirement. You may have mortgage liabilities and things, but actually are those going to continue in retirement? So let's have a look at a realistic income need for you, and then take advantage of kind of tax efficient options that they may have. Look at how pensions and can maximize relief for retirement planning, but also those tax burdens that they have now. And then how can we use that time for investment growth in that lead up to retirement. If you're looking to retire or sell up, no time like the present, because it's already on that radar. So you can really start having an impact now, especially if it's 5, 6, 7 years away.
Yeah. But like you said earlier, Dan, the earlier you start, the better, really.
Yeah.
I think when you start out as a new, associate or a new practice owner, you don't really think about the exit. You just kind of head down and, working hard. But the earlier you start that process, certainly the better your retirement pot's going to be.
Yeah, most definitely. I mean, and to be honest, that's across all areas of financial planning. When it comes to long-term goals and objectives, or, sometimes we do presentations or speak to dentists right out of medical school, and we'll say to them, so when you're looking to stop, and they're confused because you sometimes just started, but
Started.
yeah, but the earlier that you plan, the sometimes the earlier you could finish, or the more income you could have in retirement, or if you're looking to buy a property or save for your family, or one-off lifetime holiday, whatever that may be, when you've got time on your side, it really does help.
Yeah. So why is specialist advice so important in the dental profession, given the current landscape?
I mean, especially with the upcoming contract changes, they're going to affect dental finances, let's be honest. And reviewing your position with a dental specific specialist advisor, it helps ensure your objectives are still achievable. And we're in your corner. We understand what's going on, how it impacts you, and can advise you in the right way. And dentists' finances, they're complex.
Yeah.
They're far more complex than most professions out there. So as I say, working with someone who genuinely understands your dental world, I mean, it's like choosing an orthodontist for tooth alignment instead of going to a general dentist. It's about getting the specialist expertise that your situation deserves, really, to be honest.
Yeah. No, agree. So what's the first step a practice can take if they want to get a clear picture of both their personal and their business financial health?
Yeah. So to be honest, first step, book a review with a dental specific financial advisor. As I say, we can sit with you, we can understand both your personal side and talk about what's important to you there. We can then talk about your business structure, your financial health, and everything that's important there. When we look at finances, lots of things overlap and everything all interlinks into another. So it's good to have a sit down and talk about both sides at the same time, because we can have a clear picture on what's important to you both now and in the future.
Yeah.
That allows us to create that roadmap to help you every step of the way to secure that financial future, whatever that looks like for them.
Brilliant. So if a practice owner only did 3 things to strengthen their financial position in 2026, what should they be?
Okay. 3 things. So I'll keep these short and to the point. First, protect the practice, to be honest, from financial impact. As I mentioned earlier, accident or sickness, whether that's them as a key person, or if that's a key individual within the business or associates. Because, if you've got a surgery empty for a prolonged period of time, what impact is that having on the business and the potential income to the owner? You may not be able to find a locum. Locums are sometimes hard to come by, or they can be quite costly. And again, who's covering that locum? As I mentioned earlier, is it you as a principal, which could have caused other implications, or is the associate doing that? So protecting the practice from sickness and ill health or accident is really, really key. Second, I'd probably then look to say, well, actually, let's look at fully utilising all available tax reliefs and advantages, both, again, personally and through the business. As on a personal side, you can save on income tax, as an example. Through the business, there's potential ways of saving through corporation tax. And that's both through pensions or saving for their future. So that's probably, I'd say, the second thing to do. The third thing would actually probably be, and it interlinks with the other two really, is to set a clear medium to long-term objective. Because having a well thought out exit strategy or a well thought out plan to achieve those medium or long-term objectives makes it easier to do, makes it more achievable. Leaving things to the last minute as a kind of off the cuff kind of thing, it doesn't really work when we talk about financial planning. So having that clear picture and the footsteps that you're going to take to get you there, it is key. And those would be probably the three main things that I'd say to start with anyway.
Brilliant. Thanks ever so much, Dan. And if there's anything we've talked about today that anyone would like to explore more or, would like some help with, you can contact Wesleyan direct through their website and book an appointment, or you can come via your regional support manager at Practice Plan, and we'll be happy to refer you on. Thanks for today, Dan. It's been great.
No, you're more than welcome. Great to see you again, Donna.
Thank you.